welcome to my channel. Hope everyone has a great day. Thank you for your interest in my video, and let's start our today's sharing. On the 6th of June, an Australian listed technology company announced that they went listed in Nasdaq. It opened at $26 and is now sitting at nearly $30 as at market close on the 15th of June. This is quite exciting news, considering Nasdaq is turning bull again. So does this company catch up with a good trend? And is it a potential good investment option? With a decent increase of nearly 44% in subscription revenue and 70% improvement in comprehensive loss from 22 to 23, it is indeed worth having the attention, as the growth potential is outstanding. It is called Live 360. The ticker code is LIF in Nasdaq and 360 in ASX. Let's briefly go through its business history. It made a strategic acquisition of Jobit and Tile in 21 and 22 respectively to develop and fortify its own business strategy. Its main business is providing a platform used to locate people, pets, and things that matter to families. Its core offering is a Live 360 app, including features that range from communications to driving safety and location sharing. Sounds unremarkable, nothing fancy, but take a look at its revenue. It has free paid membership subscription options, Silver, Gold, Platinum, ranging from $7.99 per month for Silver to $24.99 per month for Platinum. In 2023, its subscription revenue is $220 million, compared to $153 million in 2022, which is mainly because of the increase of monthly subscription price, more than 50%, for US subscriptions, which were implemented in August 2022. It seems like 360 has large bargaining power. Does the increase of price cause a drop in subscription? And why did it only put up prices in the US market? Take a look at its change of number in paying subscription. We can see from the third quarter 2022 to the fourth quarter 2022, there was a drop in the US market, but it soared back to 1,327 in the fourth quarter in 2023, which means the pricing strategy has worked. Customers are not turned off by the adjusted price. From my personal perspective, its core service is favored by family-based customers who become loyal and stick to Live 360 as long as it operates well and is user-friendly. Within 4 years, they almost cover half of the USA market. Will it be able to increase the subscription fee for the international users without affecting the revenue too? Perhaps they will someday, as the MAU has increased all the way. The subscription revenue growth looks convincing, but how do they charge customers? Or put it this way, do they have bad debts? Do they earn the real money? Their subscription agreements typically have monthly or annual contractual terms, which are generally non-cancelable during the contract term. And they bill in advance, which means they will receive the money before or during providing the service. They have channel and retail partners, which account for the majority of its revenue and accounts receivable. The two channel partners are Apple and Google, which are 100% reliable. Hence, we can be certain that Live 360 has few debts. So to see if Live 360 is popular, we'll need to focus on the MAU. In the first quarter 2024 report, the total MAU has reached 66 million, compared to 51 million in the first quarter 2023, with a massive increase of 31%. However, Live 360 hasn't monetized its data yet. As they review in their report, they will develop a new income stream, advertisement. Please have a comparison with the other popular apps. If Live 360 fully utilize the advertising opportunities, we can embed a nearly 50 million extra revenue. Besides, with the backdrop of the AI trend, Live 360 may be able to utilize the newly financed funds to beef up the expenditure in R&D or CapEx to incorporate some Gen AI features. It won't happen right now, but there is something to expect for. We can focus on their future CapEx expense and investing cash outflow, but whether the investment will pay off still remains a concern. Remember I mentioned Live 360 took over to a subsidiary, Jobit and Tile, which booked goodwill on the Live 360 balance sheet. That means it overpaid them. But luckily, they integrate well with the core business and no impairment detected during the impairment test, which means no impact on Life 360 profit loss for now. The tile checking devices come in various shapes for different uses. The retail price range is from $24.99 to $39.99. The Majority of wearable location devices are for young kids, pets, and seniors, and it's exclusively offered in the USA. The retail price is $129.99 with chargeable subscription service, $8.33 annually or $16.99 monthly. They keep generating revenue by selling the wearable hardwares, which are complementary to the main subscription service. So it's like a bundle sale. The largest risk lies in their sole manufacturer located in Asia. With a concern of geographical conflict, they need to mitigate the supply risks. The cost of subscription revenue remains stable, while subscription revenue increases over 40% from 22 to 23, which means the subscription service of Life 360 is getting more and more competitive. For the operating expenses, R&D and sales and marketing expenses both doubled in 2022 compared to 21 and remained unchanged in 23. Therefore, we can see a shrink down in net loss in 23 compared to 2022. In the first quarter of 2024, we can see the 20% growth momentum in subscription revenue and gross profit. And the MAU has increased from 61 million to 65 million from December 2023 to March 2024. We see a 5 million increase in cash balance. Nearly 2 million of which are from deferred revenue, as they bill and receive payments from customers before they complete their service providing. During the time when they provide the service, there will be a gradual increase in revenue and gradual decrease in deferred revenue. We see a decrease in AR, an increase in AP, which represent an improvement in working capital management, as it means Life 360 collects more funds and hasn't made all the payments to the vendors for the 2 million newly purchased inventories. It can be interpreted that Life 360 is exploiting its edge in the business. It seems it has more bargaining power against customers and vendors. When we compare the operating cash flow between 2022 to 2023, we can see a decent improvement due to the main driver of subscription revenue in 2023. In the first quarter of 2024, the operating cash flow gets better due to the decrease of AR and increase of AP that we mentioned above, which is a good sign of efficient working capital management. From the investing cash flow statement, when we compare 2023 and 2022, we can notice a 1 million increase in internal use software, which means they didn't pump extra money in R&D or purchase of any new PPE, same as in the first quarter of 2024, but we might expect a large expenditure. We can pay attention to their strategy in their future reports. So in summary, the current revenue driver is still subscription service, and we'll be interested in the number of new paying clients and MAU in the next report. We will expect their progress in their new income stream, advertising, and we may also need to be cautious of how they will utilize the funds they finance from Nasdaq into their new strategy in the future. Thanks for watching. Hope you have a nice day.